Hello there, hi, it's Adil bringing you an intermarket analysis approach on the FTSE 100 going into next week and in all markets in general. I'm off to Cyprus later on today, so I'm just doing a video now to give my perspective on the week ahead. Although we do start the week from Tuesday onwards, and the light volume phenomenon should subside, and the market should return back to normal. Obviously, last week we hit the target which I expected around 6675 on the FTSE, and obviously that was hit because it was gap fill, an inverted head and shoulders formation given the light volume, and obviously a de-escalation in Ukraine obviously spurred that on. Okay, last week was a fantastic week for me on the live analysis service, 415 points for the week, absolutely amazing. That was good. That was a fantastic week. So with subscribers, so all those that want to join the live analysis service, is very easy. All you do is go to my website. If you click on the live analysis service banner, it explains exactly how I operate the live analysis service via sending text messages, real-time updates, commentary, TA, FA, arguments. So it's designed for you to learn in real time and obviously nail the points obviously as well. There's some testimonials there. Okay, so certainly feel free to read. I mean, there's testimonials all around the world, so from numerous subscribers, so that have trialed the service. You are entitled to a 1-week free trial, so everybody who's interested and wants to understand my approach in terms of trading and how I nail 200 points a week on average for the last 9 to 10 years, then basically you can come and join. I allow you to come on the database. I add you on to my WhatsApp alerts and email messages, and you can learn in real time. I don't understand how there's any other better way of learning, really. I mean, in real time, real time analysis, gives you the ability to differentiate between noise and actual news, differentiate between correct TA, the correct understanding of FA, the correct understanding of intermarket analysis, trade management, entry, exit. Literally, it's the best way of teaching, and I do that only for what, just £50 a month, when everybody out there is charging £1,000 a day, £10,000, £15,000, 10 to £15,000 for a course that will basically teach you Blue Peter trading. That's not what you want to learn. You want to learn in real time and from somebody who trades day in, day out, okay, who takes losses like yourselves, who takes profit like yourselves, and it's just the ability to control your emotions, control your psychology, your mentality, and keep a positive frame of mind. So it's basically a whole package, and again, it's on a pay-as-you-go basis. So join for 1 month, leave the next month, join again, and literally within that month, I mean, you'll learn so much that hopefully it'll give you the ability to trade independently yourself. Hopefully, I mean, obviously not in a month, because obviously it can take time, but if you are a quick learner and you pick up things very quickly, if you're an intermediate trader and who just wants to increase your success rate, then obviously again this service is designed for you as well. If you're a beginner, then obviously it can take some time, but even then it's better than going out with some of these courses out there. I've seen some of these courses. I mean, my little daughter could teach better than them, but anyway, I'm not going to rant and rave. Let's go back to the FTSE 100 and let's start seeing exactly what's going to happen for the next week. Okay, so FTSE 100, let's have a look. Okay, so FTSE 100, we are into this, obviously we have this wedge pattern, which is obviously, we have a trend line going from the July, okay, so last year, we're in a potential wedge pattern here. We have obviously closed a gap 6660, depends obviously where the FTSE opens come Monday, Tuesday, or Tuesday's cash open, but for now basically you have 6640 resistance, and there's 50 MA, which is 6660, so we're in that symmetrical wedge resistance, and obviously we have this potential H&S formation as well, which is brewing after we've had a triple top. So overall bias just certainly go towards the negative side, even though the Ukraine situation, etc., has been signed. We'll see exactly what happens. Now we use our Fibonacci sequence here. Okay, so obviously provided we remain below the 75% fib, which is 66. Let's just confirm that we're in that 60 region, okay, and the bias remains low. Obviously, if you continue to go higher than 6700 is your resistance, which is previous support equals resistance around here and here. Okay, so watch out for that 6700, 6710 level. That will act as solid resistance as well. Okay, so what are the fundamentals? So de-escalation of the Ukrainian crisis, which obviously is positive given the fact that the FTSE is at the inverted head and shoulders target. All that's been factored in. Okay, tapering still ongoing, so obviously that's still negative, even though in fact Yellen was dovish. We have to assess, and we'll see exactly what happens. Given the fact that she was dovish, but obviously unemployment numbers, or the employment numbers, came out better than expected. Jobless claims lowest in 4 or 5 years. So again, that obviously strengthens the tapering argument. So was the rally on late Friday, was it due to strong jobless claims, or was it due to de-escalation of the Ukrainian crisis? From my perspective, it was the de-escalation of the Ukrainian crisis that created a short squeeze, and obviously we pushed higher. And obviously, given the light volume going into Easter, going into the weekend, there's always manipulation. Anyway, okay. So come Monday or come Tuesday, that will be the test. And with regards to the UK, if sterling continues to move higher, then obviously that's negative for the FTSE, given the fact that you have talk of rising interest rates. That will obviously hurt demand, and we'll see exactly what happens with regards to that going forward. But from my perspective, from a technical point of view, the FTSE is into resistance. Again, we'll have to assess the situation with regards to China, with regards to Asia, Japan's Nikkei, etc., etc., and then we'll just take it from there. But from my perspective right now, given the fact that the de-escalation has been factored in, given the fact that the jobless claims out of America were stronger, and therefore that reignites the tapering argument, again, obviously higher interest rates and higher costs of debt around the world, and again we'll have to assess the situation in emerging markets, see how they're doing. The emerging markets do seem to be coming into resistance. Okay, so there's a lot of factors at play, but from a technical point of view right now, and just generally fundamentals, we're into resistance on the FTSE. Okay, let's have a look at the FTSE 250, see if we can get confirmation from there. Again, FTSE 250, obviously previous resistance. This is why I call for a bounce in the FTSE. We've got the 6675. Look at my previous video, I expected a bounce from here, which we've obviously got. Lower channel resistance, previous resistance equals support. Bang, off we go, previous horizontal support. We've now pushed higher, now we're back into previous, well, support equals resistance, therefore we're going lower. And you can use your Fibonacci tool if you want you to. Take the pivot high there, take it to the pivot low, and obviously we're in the 50 to 60% resistance. So again, resistance. So what will my bias be come Monday, Tuesday? It will be short. Okay. Now that's not just the FTSE. There are other variables at play that I'm taking into consideration. Let's just have a look at the FTSE 350, see if we can get any sort of movement, any indication with regards to that. Again, if we use our trend line here, just connect the pivot highs, and basically you are coming into resistance with regards to this as well. Now you did have a HNS formation which has been negated to a large extent, so that your left shoulder, head, right shoulder, and obviously we've gone lower, so obviously that's been negated now. So excuse me. Okay, so obviously we're going to gap higher here, given the fact that US markets rallied. So you're looking at around the 3640 level. Again, that's resistance, and we're certainly looking to go lower. And what pattern do you see here? You've got the HNS formation here, so there's your left shoulder, you've got your head, and now you've got a potential right shoulder brewing here, bang, and down we go. Okay, so is that due to rising interest rates in the UK? Possibly. Is that due to Ukraine, Russia escalating over the weekend, even though they've talked about de-escalation? Could be. Okay. Could it be to emerging market concerns? Could be. Okay. Could it be to any geopolitical event around the world? Could be. Okay. Could it be due to any economic data that comes out of Asia, US, Europe? Could be. Okay. Could it be due to the fact that ECB doesn't adopt QE, even though it's dangling the carrot of QE? And that obviously puts a negative tilt towards Europe due to the fact the euro is going higher. Could be. Okay, so again, we're always looking for a fundamental catalyst. Okay, and as traders, we just keep observing news flow, and then we can react accordingly. We have our game plan in advance, which I'm giving right now, and obviously if that fails, then we take the other side. So if given the fact that ECB dangles a QE carrot, Mr. Abe Kuroda come out with another blitz of QE, Mr. Yellen comes out with more dovish comments, stronger economic data supporting the tapering argument, and obviously even though you've got dovish policy as well, there's a double whammy. Obviously the markets continue to short squeeze higher, so, and then I'll switch my bias long. Okay, so always be flexible and just go with the flow. Okay, so that's basically the FTSE. Let's have a look at our European indices. Okay, European indices are important here because obviously Europe trades as one block. We've got Euro stocks into gap fill resistance and horizontal resistance, therefore that confirms the resistance on the FTSE using intermarket analysis. The German DAX is now into its 50 MA and is into gap fill resistance. Again, that confirms the resistance on the FTSE, and that basically utilizing intermarket analysis bias remains short. Okay, looking at our CAC chart, let's just go to our daily chart on the CAC. Again, we've cleared gap fill resistance. We are into horizontal resistance again. confirms resistance on the FTSE. Okay, now let's have a look at our American pairs quickly. Nasdaq obviously into its lower channel resistance, back into the 61% Fibo, have had a doji, lower lows, lower highs, H&S formation from a large upturn perspective. Down we go. Okay, Dow Jones, this is quite important. Let's just bring up the Dow. Dow has a H&S formation. The FTSE and the Dow generally tend to have a decent correlation. Okay, and obviously we're back into horizontal resistance. There's a doji candle, 61% fail. Down we go. Okay, so that could well be due to tapering. Could be numerous reasons. Okay, that right shoulder there obviously needs a FA catalyst. Just be ready. Okay, just be ready. I mean, personally, I think the Ukraine situation is going to escalate again. I can't see why Putin can remain silent. But anyway, either way, that's basically what we're seeing now, and we'll trade what we see. Okay, not what we think. Okay, so let's have a look at smaller time frames. Look at the retail index, by the way. That will be helpful. So if we look at a daily chart of the retail index, so retail index, we're back into resistance. So obviously for the FTSE, that means resistance for the FTSE as well. Let's have a look at the banking stocks. We've got emerging markets here as well, so I can have a quick load of emerging markets. Emerging markets again seems to be struggling right here. Again confirms my bias on the FTSE to go short because we're struggling right now. So I can't see how this is going to go any higher from here. I mean, we are into gap fill resistance now, and certainly looking to make a move lower. From my perspective, this just looks like a H&S formation to me. I mean, you've got your right shoulder there, obviously the head is there, we've gone and closed a gap here, there's your gap fill resistance, and now looking for a right shoulder and to move lower. So again, doesn't look very good to me. Certainly looks exhausted, if anything, and we'll see exactly how that plays out. Let's have a look at the other variables that we have to observe. So retail stock, okay, oil sector again back into resistance. So if you look at a daily chart of the oil stocks, you're into resistance right here. So given the fact that we gap up, we're going to get to around this region here. Okay, so that's basically where we're going to end up with regards to that. And the mining sector as well, you look at the lower lows, lower highs continue there, and obviously you've held that resistance, and there was no real reaction on come last Friday either. So we'll see exactly what happens with regards to that. So overall, not looking good from my perspective. Let's have a look at the FTSE now. Okay, so FTSE 10-minute chart, we're into gap fill resistance. There's your gap, 6645 is your gap. We ended up at 6626. Given the fact that the US markets went higher, the futures were trading around the 6665 level. So basically that's where we closed the gap at 6645 actually. So 6645, obviously 6665 has gone a bit too high, and that's pivot R3, and that's basically what I'll be looking to close. So again, resistance, so bear that in mind, gap fill resistance on a 10-minute chart. Let's have a look at a 60-minute chart. 60-minute chart, obviously inverted head and shoulders pattern was 6675 target, and 6645 was the gap fill resistance. So basically we're there. Okay, so 6650. So watch out for this level here, given the fact that we've got a trend line here, and we're looking to go lower, and the inverted head and shoulders target is basically complete. Okay, so that's basically my thesis from obviously from an intermarket and technical perspective. Still not 100%, folks. Still feeling rough. Okay, so that's basically my view. The IHS target has been complete. The short squeeze is over. We've got gap fills in European markets. Still no QE confirmed from Europe. So again, that gap fill, those gap fills should certainly hold until we get confirmation of QE, and Euro still remains afloat. Okay, so that's everything that we're observing and understanding. And also remember, given the fact that the de-escalation from the the Russian-Ukraine situation, that obviously will cause a euro to go higher, and again that could dampen exports going forward for Europe. So there's a lot of permutations right now. There's a lot of different ways in which this market can move. Again, it's our job to keep on top of things and obviously observe news flow. I've got to dash now, folks. Got a plane to catch. So risk on, risk off, wax on, wax off. Goodbye now.